Today is Monday, September the 16th, and I have been away for 7 trading days and unable to do these because of the location I was at and the time zone difference. But I was watching the market and certainly watching what was happening to my portfolio, and it did very well last week. I haven't done the math on it, but I am reaching a number now where I am comfortable in terms of an annual target, and I'm seriously thinking of getting out of the market this morning because I see gold up and I see other stocks down, and I hear rumblings about a war with Iraq, retribution in Iraq. I just don't trust this president. The China talks to me are just Twitter statements. But I'm looking at these charts now for the first time since I've come back, and I'm sort of doing this live because I'm very concerned. And what I see, this is too busy a chart, but I want to show you some things. I want to show you this trend. Well, we'll look at a trend line in a second. First of all, we'll look at the Ichimoku later. We're looking at a weekly chart here, and this has taken a Fibonacci from this level to this level, watched the pullback, and then predicted where it would move if it were to repeat the 1994 to 2007 bull run. And then, of course, we had the 2008, 2009 recession. We've got 2 sets of Fibonacci's. And we're going to look, and the second set of Fibonacci's is, that's the extension. Well, we've got 2 of them. Let's look at this one here. And this one is this wave up here that had this very small pullback, and now another big run again. So we've got 2 Fibonacci's, and let's look for correlations for people who are trading one or the other or looking for both. And I think that there's some interesting and surprising things to see here. So now let's zoom in. Let's first of all find this trend line. Let's take that trend line and let's readjust the trend line to here. And we're going to touch this one and this one. And let's look now how close we've come to that trend line. We still have room to move up, but is it going to happen before we have a pullback? Interestingly enough, on one of our Fibonacci's, we've just moved up over the 78.6%. We've got, you might say, an inverse head and shoulders here, and if this were our neckline, we could see that last week we came down and we tested the top of the neckline perfectly after having sunk below it, came up and tested it. Now that would indicate that we're ready for a little pop. Interesting. But we're also just above this 78.6. Let's take a look at both of those Fibonacci's now and look at this one. This is the one that would have repeated the bull run from 94 to 2007. And look at that, we've hit that 200% right here. And we pulled back to 150%, which is coincidental with 38.2 on the most recent wave. This 200% is very close to the 78.6%. So you could say they're nearly coincidental. We're at a point now where the market is saying we've repeated that bull run move from 95 to 2007. Maybe it's time to take a break. We also have an Elliott wave prediction that could take us up to 3301. Is it going to happen right away, or is this an opportunity to grab the profits that we have and take them off the table and either miss a little bit of the upside and make sure that it's confirmed good news, or wait for a pullback and buy everything that we used to own but at a cheaper price than what we sold them for? So let's take a look at Apple. First of all, let's go back to the SPX. And let's just add in our Ichimoku and see if there's anything telling there. And there isn't so much, because on the weekly, the Chiku span is way up, not showing any resistance. Support would be down around 29.50. We're jumping over this flat cloud, but we did bounce off of the 200 moving average. That's a daily moving average. You see up here, I'm plotting a daily moving average on a weekly chart. The last time that we met, that we talked, we had put some arrows in saying basically we're talking about going up, but incurring congestion in the cloud, which we did. And now, just through time, we said we would move out of the cloud eventually, just through time, but we did, and in a big way. I'm thinking I'm selling a lot of stock today. So let's look at Apple. Apple last Friday had a pullback to stop on the 8 EMA, which is a good sign, and we're above the 78.2% Fibonacci that we've drawn, so we should be on our way to our all-time high of 233. And we just had good news that Apple's iPhone 11 sales appear to be as good as they were last year. Perhaps we wanted a little bit better news than that. And we've also seen some of the tariffs, I think, relieved on Apple. Goldman Sachs made a bearish call, and that's what caused this huge gap here. I never trust Goldman Sachs. My opinion of Goldman Sachs is that they issue these stark warnings and that they are the buyers when people are selling as a result of their warnings. I don't think that they are selling out of their own accounts. So that's what I feel. I don't trust Goldman Sachs as far as I can throw them. Caterpillar has had an amazing run up, and what we said last time we met is that we were going to come down and we were going to touch the gap. We're not going to fill it, and we're going to move up, and that's exactly what happened. Now the 50 is moving up, the 200 is moving up. Caterpillar looks bullish, but Caterpillar is going to depend on some infrastructure spending and some trade deals with China. I'm not sure that that's in the cards so soon. Let's look at the early market, and it shows Caterpillar down a little bit, only 31 cents. So I'm not selling at the open, but I'm watching. GDX has finished its pullback. I think is ready to move up again. GDX is our safety stock for bad times in the market, and GDX is up today by 58 cents. So I've got 1,300 shares, so it's a nice little gain. By the way, if you're holding Whirlpool, check your bank accounts. Their dividend was paid effectively Sunday. You're going to see it in your bank account today. AT&T has done remarkably well, and because it's such a high dividend stock, but I think there was some bad news about their CEO or their CFO, which is causing people a bit of concern, but they had this big bullish move up when one of the analysts or one of the big hedge funds purchased a lot of their stock and said they were going to double in the next 10 years. And then they've had this trending around. Now, people may move to stocks like AT&T in tough times because of its dividend. I'm not going to tell you what the dividend is today. You can look it up because I just want to finish this so that it doesn't get too long. WDC has had an amazing run. I got out of WDC long ago and invested in Caterpillar and Whirlpool, which I don't regret. But this was a nice stock if you were holding on to it. Snap, we didn't buy because although it's broken out of this channel, it's in the cloud and it's still stopped by the 50. I'm losing interest in Snap right now because if it was going to break out of this bull flag, this flag wouldn't have been so long and the breakout would have occurred already. So I'm going to keep watching Snap, but I'm not going to comment on it until I actually see something happen. So this brings me back to what to do today. Looking at the open and keeping a close finger on selling half my Caterpillar, possibly all of my Apple, because I'm in the green there. Whirlpool paid its dividend, and I've got a huge profit there. So I may take at least half of my Whirlpool today. In other words, I'm really doing well with my profit year to date. It's the best year that I've ever had. And I attribute that to all of you watching the videos and encouraging me to do them every day and to be more attentive with my technical outlook and technical trading. So thank you very much. I hope that the people who are watching me before I came back, or before I went away, are coming back. If they don't, it doesn't bother me. I'm going to continue to do these because they've been very, very helpful for me. So thank you. As I make sales today, I will tweet them. Thank you.